Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's weekend webinar. Traders, the weekend webinar, you know, is the time I like to use to keep us Omniacs in tune with the larger picture. You know, during the week with day traders in, out, but on the weekend, I like to take a longer-term look and see what this thing looks like. Now, we're going to talk about a couple of things in this video. The Asian shoe dropping, you've heard me mention that for the last few months. It is finally beginning to materialize. Dow Transportation Average is the leader of the averages, and it has dropped 452 points since it violated its previous lows. The Dow Industrials Average have violated its previous lows and dropped 416 points. Now, if the leader is the transports and it dropped 452 points, and the follower is the S&P, do you know where the S&P dropped since it made its previous lows or since it violated its previous lows? 11 points, traders. Only 11 points lower than its previous lows, but the leader dropped 452 points, and the whole entire banana, the Dow Jones Industrials, dropped 416 points lower than its previous lows. There is no way the S&P is only going to do 11 points and stop there. So right off the bat, I will tell you that the larger picture that we're looking at is absolutely pointing lower, traders. There is no relief in sight yet. Now, let's revert to some news which should help to solidify the technical picture. As you know, the fundamentals always come out in the charts first. The fundamentals of the news, the charts are the price action and the news and traders' reaction to such, but visually, right? It's a chart, you can see it, but it's all the same, traders. With that in mind, I'd like to start off with this little piece of news because it's pretty scary. Traders, throughout good times and bad, this entire planet as a whole, its economy has grown every single year since World War II. Every year, the economy of the planet has grown because there's always been enough robust growth in some countries to balance out recessions in others year after year since World War II. This year, we are reporting the first time ever the world's economy as a whole is actually a fall in economic production, traders. We've never seen that before since the 40s. And there is a massive collapse in trade amongst the countries of this planet that we have never seen. Totally unprecedented since at least the war, probably much before that. Okay, then we talk about the Asian, we talked about, well, let's keep Asia off the side for a minute. We talked about the two shoes that would drop first. The United States would have its problems, and it did, and the market started to go. Then Europe began to have its problems in the middle of last year up until now. On top of that shoe, which, boom, definitely came down as well, you have Eastern Europe now, which is just crushing the rest of Europe. Eastern Europe, traders, looks really, really scary right now. Take a look at the newspapers, take a look at the charts, take a look at the fundamentals. Eastern Europe is really hurting the rest of Europe, which is hurting to begin with. Then we talked about for months after months, especially the last 5 or 10 videos, I kept saying shoe number 3, the Asian shoe, boom. And when that dropped, it would really hurt the stock market and, of course, the indices, right? Then recently, the last couple of weeks, you're starting to read about it in papers every day, how Asia is finally joining in the world recession. Japan has dropped 10% in its manufacturing output, traders, 10%. Month over month, year over year, that's enormous. That's a big drop. Now you have India and Malaysia causing much grief. I mean, much grief coming out of India and Malaysia. And here's a big piece of news out of Asia to begin with. Asia's exports, after we did the calculations, are down over 50% from what they were last year. 50% less exporting this year from last year. That's insane, traders. That is huge. So the Asian shoe is absolutely dropping. They are joining the race, and it's knocking us down to another lower level. The world's stock markets are being hit because of this. Now let's go into the United States for a moment. You think that news is bad? Talk about revisions, traders. Don't ask me how the U.S. revises numbers, but check this number out. U.S. Commerce Department. The revision of last month's business inventories, ready for this, went from plus 6.2 billion, then they revised it. You know what the revision is? Minus 19.9 billion. How do you start off with 6.2 billion plus and end up revising it to down $19.9 billion? How does that revision even happen? That tells you that the government can't even figure out how to calculate this mess until a month after the numbers are released. They disseminate the information and then they realize, wow, it's even worse than we predicted. That is the environment we're in right now, traders. The fundamentals are there. The charts are going to tell us more. We have a red omni scheduled for at least Monday, if not further, this week in the indices. Also in the euro currency, traders, it does not look good, and I have a feeling that Eastern Europe is part of the reason why it looks so bad. But the euro currency looks like it's going to be hammered as well. This video, however, we will focus on the S&P because, traders, I got a couple of charts I'd like to show you right now, and they will absolutely show the 452-point drop in the transports, the 416-point drop in the Dow, and only 11-point drop in the S&P. I mean, doesn't that just sound wrong? Do you guys think that sounds wrong?
Yeah, it's wrong.
Sounds like something's going to happen here and it ain't going to be on the upside, right? That's what I'm looking at. Let's go look at some charts right now, traders, and we'll take a look. Okay, traders, what we are looking at now, first chart on the menu is the Dow Jones Transportation Average, which is the leader of the indices. We have proved it in many videos. Charles Dow has proved it. We're not going to get into that right now. But the transportation average is the leader of the indices, which you are looking at. As of Friday, we traded 452 points lower since violating previous lows right here, traders. This is previous lows. You can see by the red line. We have violated that by 452 points since we broke down. That's the leader. It took out previous lows and dropped by 452 points. And here we are right now, right here, looking quite bearish. So if the leader has done that, since to say that the followers will be right behind, right? Well, let's go take a look and see if that's the case. Okay, traders, right behind the transportation average is the Dow Jones Industrial Average. As we all know, it's part of it. The transports are part of the industrial. If they're going down, the industrial is going with it. The Dow Jones Industrial Average, which you're looking at now, this daily bar chart, as of Friday, traded 416 points lower since violating its previous lows. 416 points lower than its previous lows since it violated them. All right, so we had the leader violate and break 452 points. We had the next runner-up follower violate and drop 416 points since it violated previous lows, right? But we trade the S&P because we're S&P day traders. The S&P should look just like this, right? A good 300-400 points or a good 100-200 points lower since we have dropped 416 points in the Dow lower than previous lows and 452 points in the transports lower than previous lows. So the next chart should look basically the same, right? Let's go look now at the S&P chart and see if it doesn't show an indication of where it would like to go next. Okay, traders, we are now looking at the S&P daily bar chart. This is the March contract, the one that we trade every day. Previous lows are here, and the S&P is here, traders. Previous lows and the S&P current are at the same price. You know what that means? That means the follower is going to go down here and follow the leader just like it always does. Traders, the S&P is sitting in the 728, 735 area. Let's call it 735 because of Friday's close. And it is basically even with previous lows. Not down a few hundred points, not even down 20 points. It's basically even with previous lows. On top of that, look at the respect being paid to this channel right here, traders. You have a channel. Look at the respect being paid. And this looks like it wants to at least go down here to test the bottom of that channel, bringing us somewhere near 700, maybe 697, and probably much lower than that. Traders, you can clearly see that the two leaders, or I should say the transportation average, the absolute leader, has plummeted lower than previous lows, and the Dow Jones Industrial Average had followed it. The S&P has not made its move yet, traders. In fact, we have only dropped 11 points lower than previous lows. Previous lows were 737 until Friday. On Friday, we went to 725. We only dropped 11 points lower than previous lows. I do not think that's enough, traders. I don't think that has caught up to the leader, nowhere near as deep as it needs to go. I'm expecting some downside here in the S&P. Indicators would agree. I cannot find an indicator that doesn't agree. So all systems go on the downside, barring any insane surprises. But you know what? Those surprises are in the charts anyway, as fundamentals always come out in the charts first. Traders, do your homework, hold on to your hats, and get ready for another down week this week. So, traders, you see those charts? I mean, I'm going to say it again. The leader goes 452 points below its previous lows. The Dow Jones Industrials go 416 points below its previous lows. And S&P goes 11. I don't think so. You know what I mean? It sounds so wimpy. It can't be right. It's got to go lower according to what you're looking at here. So those charts, I think, are telltale for what's coming next, traders. Make sure you do your own homework. Again, these weekend webinars are designed to look at the larger picture. You better believe we got trade placements set up and trade ideas set up at the site for you for tomorrow in Euro currency, in the S&P and the NASDAQ. I am looking at these markets. I have areas where I would deal if the market reaches them. Make sure you come on down to the site. It's www.livewithoscar.com. Jump into the chat rooms, and we'll certainly share those levels with you. And hopefully, if you stick around, we'll teach you how to do analysis a lot like the analysis I just showed you on the board. Plus, traders, we get into much more detail when it comes to technical analysis. So come on down and learn how to view the charts. Traders, the charts aren't enough. I will tell you this right now. The charts are a portion of what you need to know. If you don't have the proper mentality to execute your trading plan, it doesn't matter what you know about technical analysis. You're never going to turn it into a winning combination. What we really stress upon teaching at the Omni Trading Academy is the proper mentality and discipline required to actually execute your plan and to have some longevity in this business, traders. Because let me tell you something, you can't shoot seat in the pants and expect to be here next year, because you're not going to be. You need to have a plan, you need to plan your trade, you need to trade your plan, and then you need the discipline required to actually make that happen in reality. It's great to talk about, but if you're not doing that, you're not going anywhere. You're spinning your wheels in this industry, and I know how that is. That's why I invite you down to the Omni Trading Academy. So make sure you come on down and allow us to help you out. Traders, the contest is on, baby! Yeah! Trading contest begins this evening. We wish all of you the healthy up yours in the trading contest. You traders know what that means here at the Omni Trading Academy. Traders, again, I'm going to mention Euro looks ugly. Keep an eye on that. Dollar looks strong. Definitely, the indices look ugly, so do not fall in love with the upside of any indices here. If they rally, we are selling into them until something changes in the environment right now. The economic environment is calling for a sell of rallies every time you see them. We are bears acting as such in a bear market, and we will continue to do so until somehow we bottom. With that in mind, I will say one thing about bottoming, traders. I expect the three major shoes to drop, the US shoe, the European shoe, and then the Asian shoe. Then after that, I thought we'd go into a long flat before we bottom out. I'm hoping that this Asian shoe is the last thing to happen so that we can start to flatten out down here. But we'll see. For now, we're falling off a cliff. We're not flattening out, and don't be fooled by the bulls that are out there. If you can believe it, traders, there are still some bulls that write to me and go, Oscar, it's a double bottom. We're going to the moon. And I'm like, all right, you know what? I'm not even answering your emails anymore. I'm done. I'm not answering bullish emails anymore, traders. I've been bearish since 1577. I've been getting bullish emails since 1577. Traders, where's the plunge protection team now? I mean, come on with this bullish nonsense. They haven't been around since 1577. We're about to break 700. There is no plunge protection team, so stop waiting for them to come in. Now, traders, we were bold enough to make a projection during the bull market of 207. We were doing videos. We projected a 1576 high. I believe the market traded $1 past that and went down into a bear market. just as Omni predicted. After that, I made a prediction of 688, and we are talking a year ago at least I made this prediction. I have kept up with the prediction at my site. I've mentioned it in many videos. We're starting to get there now, traders. We break under 700, we'll be there like that. So let me tell you something. This Omni seems to know what's going on. It called the highs, and it called the projection of 688, and we're almost there. I mean, is that, hey, a round of applause for the Omni or what? Yeah. You can watch my YouTube videos for the last 2.5 years, and you will see every one of those calls made way before it was going to happen, traders. Not after. We're not backseat quarterbacks or backseat drivers. We're not armchair quarterbacks. We tell you what should happen tomorrow, today. Not many people are brave enough to get in front of a camera and do that, but we do it every day to the tune of 417 videos, and we'll continue doing it every day. So make sure you stay with us, traders. At least we got some kind of handle on what's going on, because I'll tell you what, when I listen to these maniacs on television, I don't know what they're looking at. I just don't know what they're looking at, but they're not looking at the same stuff we are. So let's try to keep this thing right, keep ourselves focused, not get overzealous, and trade what we see, not what we hope for. All right, traders, I think I'm done here. I hope this webinar is going to help you to keep the larger picture in tune. Please do your own homework. Don't ever accept anyone's opinion unless you've done your own homework and it coincides with their thoughts. All right, traders, be safe out there. These markets are dangerous. Never trade without a stop. Give me a call anytime there at 702-629-4755. And don't forget, keep your emotions out of trading. And one of the best things I can do to help you with that is to tell you to say this to yourselves every morning, every afternoon, every evening. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.